And good evening. This is the Elliott Wave daily update for the NASDAQ 100 and the S&P 500 for Tuesday, September the 17th, 2024. It is Federal Decision Eve. And today, basically, we actually had a good start to the day. We had a nice little downswing and we had an upswing. And so there was some movement intraday. But when we take a look at the charts, it really doesn't show us that we had a whole lot going on. So I want to go over uh, one of the counts actually that actually still could be a possibility. And I thank you, Daniel, for bringing it to my attention that I had been working on the three that I was showing, and I showed over the weekend, then showed again yesterday. So today I'm relabeled, but I want to show that we still have the possibility. I believe the possibility still exists, and it would be acceptable in terms of a count and a move that this minor fourth wave still underway, but we still are within the minute B of the minor four. And there's still that possibility that we could run up and perform or work through an irregular B wave. Now, I've carried that one for a long time. Of those of you that have been listening and following me for any length of time, I had what ended up being, a primary fifth wave up for a very long time. I had been considering it as an irregular B wave, as a part of a larger primary ABC to the downside for a cycle fourth wave. And so that was my preferred, and my alternate count was exactly what is now the preferred count, that it was primary wave 3 that completed in January of 2022, and that initial drop to the October 2022, 2022 low was primary wave 4. And that put us into primary wave 5 now, of which we are getting ourselves up there. We're still trying to finish an intermediate third wave. Now, get this. If this actually is going to be an irregular, man, it's going to feel like what the new highs that we could likely expect, and then a total drop down. So let me dive into. So what I'm really going to cover today is just really going over the what if that happens to be the count. So the others still remain in line. And unfortunately, today did not really add anything to any of them. So as you can see, even if I take it down and put it on the hourly chart, it just, we had that. Okay, so what was it? That this ends up being from here, a 1 or a 3 or, something? Did it get complete there? Looking like maybe, and then we're coming down. Is this 1 of something off of that level? 1 of the next line up? So, again, everything remains open. And so I'm just kind of giving it some thought that maybe it's a 3, or maybe it's going to even get smaller, and this is 1 of 3, 2 of 3, 1 of 1 of 3 of 3. So, it continues to subdivide. So I'm just kind of going to leave it alone and let the market determine and then show us. But I want to go back out to this 4-hour chart so that I can go over. So again, this remains here because if indeed this minor fourth wave is still in action, this remains in play. This area remains in play. And now I want to just show you, should the market decide to run itself up. And so we have the A wave, A of B, B of B, and we're in C of B. So even if this count is accurate here, that 1, 2, 3, which I actually, to be honest with you, I don't. I think that it could still be, this is just wave 1 up here. wave 2, 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3. I still think we've got quite a bit to go. But I want to leave it there just until the market fills in that blank. So, but if we're working a C wave up, and it is going to be an irregular. Now, for the second thing it could be, folks, is that it's an A, B, C, B, and we come in flat. And what would that say? Well, that tells us that this particular C wave has got that much more to go, or anywhere up into this area, right? So, but just above 21,000, I would think, up to and including 21,213, which is the high basis the December 24 contract. So, and then then we'll still be looking for a C wave down. So this fourth wave is, in my opinion, still in force. Now, I know I was showing, well, if this is the 4 and this is 1 and this is 2, that's 3. But look at this 3. If it's 3, it ain't blasting to the moon. And that's really what I would expect to see. I would think that it's at least above this, otherwise a very, very slow start. If this is minute wave 1, minute wave 2, then this has to be minuet 1, minuet 2, 3, 4, and no, excuse me, sub. It would have to be here, but sub 1, 2, 3, 4, 5, and just then you stick a minuet wave 1 on top of it, because there would have to be so much more for this to get itself up to these upper levels to complete that minor fifth wave. Indeed, if this is done. So all of it still, it's like, okay, what is going on here, market? Because I know right now, the big weight, we want to look for the Fed. Well, pretty much everything's already been baked in except the indexes. They have to give their response. They have to give what they think. And so the other thing that I really want to include again today, and again, in this update, I'm going to do it because I know that I've reserved it and I've been telling you that this is what I discuss in the trade room because I'm looking for people to come over and become a part of my trade room because of the information. It's a lot of information and it is more detailed and it takes longer to put it all together. So the additional work, I'm like, well, okay, let's put it into somewhere where people are coming in and getting it, and they're being able to make money with it. That's the whole concept behind that. But I want to give it here tonight, because if you've gone and you've watched anything from Spot Gamma, you begin to understand what they say. Where the options flows go, so goes the market. And I believe I'm saying that correctly. And their models and what they are talking about continues to be real in terms of that is what the market is doing. These sudden sells we see today, or many days, it's when a level is being broken. And every day where I'm getting the levels of where gamma is being measured and accumulating, where a volatility trigger is. Are we in a risk on atmosphere or a risk off atmosphere? And how those levels shift to really determine if this now gets broken, watch out because it should be dropping off a cliff and flip back over to risk off trading. And it is all due to the options flow. The increase has been so gigantic, spectacular, or however word you want to use, in an options trading. I'm talking big, big, huge numbers. And those numbers also produce Greeks, as we call them, and that lets the trader know what they're going to have to do to keep this position neutral against market movement, or if they're going to get where they're going to get massively long or massively short, should a different level break, and when you are a position trader and you're working for, or even on your own, and you have a large enough position, or you're a hedge fund and you're hedging that fund, it's going to require you to maintain the hedge. And so that's why we see call walls shift, put walls shift, volatility triggers shift, because options are trading every day. And then again, because we have various expirations, like 0DT options, they expire every day, Monday through Friday. They expire every day. And those happen in our indices. So the SPX, the ES, the NDX, the NQ, the RTY, the RUT, the IWM, these are daily expirations. And so a lot of large funds, a lot of large firms, this is where they come to trade. And they're hedging the firm's positions. So it makes sense that when we get something that's really going to move the market, i.e., tomorrow's report, tomorrow's Fed decision, tomorrow's Fed conference call or conference, press conference, if he comes out and spits the same junk, I don't know. I would think the market's going to start to react. It's like same old, same old. Well, you ain't doing us any favors here, bud. Or and they come out with a 50 basis point or even greater. Well, what does that tell the market about what the Fed feels about the economy? Is this sustainable? Is it not sustainable? Are we in trouble again? Is inflation going to threaten to reemerge and climb again? Is this just going to be a temporary fix against a long-term problem that may reemerge and then rates have to go back up? All kinds of things. So let's just review what this particular possibility of what the market can do and still be within a minor wave 4. And if it does get up to these upper levels, would still be expected to drop. And I want to show you what the fib would look like, because here we have, if we're in an irregular B, first of all, we'd have to get above 21,213. That would be number one. All the way up to there, we would be able to consider it AB, flat, C wave coming down. Right? So this actually, that could have been the B, and then we have to come down. But see, this now, it's like, man, this is not clean. This is not clean. So it tells me, in terms of just structures, we're still corrective. We're still within a corrective structure. Impulse is pretty easy. 1, 2, 3, 4, 5 seems to be pretty easy. It's the corrections that can take one of 13 different variations, which includes diagonals, which includes wedge triangles, which includes double ABC, triple ABC structures, all of these different avenues that they can take. Now, here's the real gist of a lot of this. It takes the market twice as long to correct than it did for the original corrected, what is being corrected. This took, I'll tell you right now, there's the high, 11th of July, there's the low, 5th of August, less than a month. So from the 5th of August until today, we're now over a month. We're a month and a half into what should be correcting this. And it may take even longer, right? So again, the entire correction now is 2.5 months, no, month and a half, excuse me. So this is July the 5th, and this is September the 17th, August, September, 2 months and a week. 2 months and a week. We've been correcting what took us, it did take us a long time to get up there, folks. This is actually going back to 2023. So, but still, it just feels like, boy, we're just still working through this correction. When do we get back to being impulse? So my point is, it takes a lot longer for the market to correct than it does to impulse in either direction. So if we're still working at a minute wave B, of minor wave 4. We've completed the A and the B, and we're in the minuet C wave of minute wave B. If it goes irregular, that means we're going above, we're creating a new high above the existing high, which basis the December contract is 21,213. And we'll get above there. Most common on a Fibonacci level, when we run a Fibonacci, is 1.236 and 1.382. Those are the most common areas. So what would happen? Well, we'd get this C wave to come soaring up, get above there, and then we have 22,070 and 22,601. But roughly 22,070 and 22,600. Now, you're like, well, those are really major new highs. Weren't we kind of looking for that if this was 1, 2, and we're in a third, and the third can get us up there, and the 4 and the 5, we're definitely up into this area? Yes. But market's not letting us know that that's the situation. We're stuck at what should be an explosive wave. All right, if this is one ABC minor 4, minute wave 1 of minor 5, minute wave 2 of minor 5, minute wave 3 of minor 5 should be a kick butt rally. And we're stuck. We're stuck going nowhere. Now, either the market says, okay, well, we've been waiting, and now we got tomorrow's news, and now we're just happy as little larks, and we're going. And the options flow continues now to break upside levels, which get kicking that risk on trade into high gear. That's what could happen. Now, should it happen, these would be levels. If it only comes close to here or even equals that level, it could still be an ABC up, and it still could be a B wave, and now we're working a flat, and then we decline would be expected to basically come back to that same level as wave A. So primarily what I am saying here is I believe we're still inside this minor fourth wave. And I have, all along. I've been giving all of other sides of what possibilities could be, but most of them roll around of how we are still within this minor 4. And that, again, fits on the fib time cycle, or the fib, the time fractals, when we're considering that, the minimal one was yesterday. And we have another fractal that goes out to really, we can push out into October and still be within the time fractals for this fourth wave. It still does fit, whether we go up and then down, or we finish by going down and putting that low in for C. We still have time to do that. The first level where it could have completed was yesterday. I believe the next one is either a week or so, or the first week of October. So we're pushing ourselves into year end, basically. But we have a lot going on in between then and now. Okay, so let's just say it does, and it gets up to here. I want to now show you, well, first of all, we're looking for 5 waves, 5 clean waves, taking us up to put in the C wave. Now, I wanted to show you, because what fibs tell us we're looking at for that C wave. So here we go. We're going to go down here again, and now we're going to push up. Let's say it got to this level. The most common retracement out of that for the C wave is 1.618 of A. And that takes us down to 16,292. Now, I believe I took them off, and I'm not sure why. I'm going to go back out to my weekly. I need to put these back on so that we can see that we're not that far off. Come on. Base in, come on, right? Come on. Up one more. It doesn't want to do it. Oh, I know why. It is putting it in the right place because it puts it to the old. Now I got to bring it back down to my 4-hour chart, and you're going to see that I can move it. It still goes to the old anchor, which is via the other contract. So I want to activate it, and now I'm going to bring it up to here. Come on. Activate. Thank you. Up to here. There we go. All right. So here we have just the fibs for wave 4. And now where does this one go? Oh, all the way up there. So now 1.618, we see we're just below the 50% for the total wave 4. Very acceptable, right? That would be acceptable. There's the 382 that takes us right to where we thought, right to where we've been. But if that's the A, and we do get an irregular, C would be expected to take out that low. And it does. Now that's if it goes 1.236. We're going to go up a little bit higher if it goes full force, right? And that would push us up. And now we're at, come on, 1.6, and not, we're between 382. So 1.618 is 16,840, right in between. So you see how it still fits the overall fib discussion about this minor fourth wave. So the possibility is definitely alive. Even going to 22,600, definitely alive. So what do we look for? That it really gets itself going pretty dang quick here. In other words, two sides of this coin, and this is really the difficult part. This is where the options flow will really dictate. When we go back and we look at August the 5th, which was here, it was the option flow that gave us this, felt like a mini crash. It was the options flow. Breaking the levels, producing a risk off scenario. Now, in the NASDAQ, the level for the NDX and the NQ coming down is 19,417 right now. And again, that's in the NQ. In the NDX, it is 19,190. Now that's the number I would hold on to because we're dealing with the flip in the future. So the NDX closed at 19,430 something. So 200 plus 220 points below there is that volatility trigger. If that volatility trigger gets knocked out, then what happens is that it flips back to a risk-off situation. Risk-off means that gamma is kicking in and traders are being forced to sell. So it produces a sell situation. It produces a situation that I would continually say, the market is really having a hard time catching a bid. Because every time it does, it gets nailed. It does, it gets nailed. Until we can get enough to switch it around. Now, I'm finding that it's happening pretty quickly here. It happened twice here, and then we flipped it right about there. It had to get itself back above a particular level. It fought it, but when it finally did, then we just got the risk on. Risk on, and then right there, we started to get risk off, and then we got risk off again, and then came back above this level. Risk on. So we're still basically in a risk on, but now they're waiting. Now they're going to wait to see what happens. So those levels become very important. The volatility triggers become very important. Other things that become very important are going to be, and I'm going to tell you something, I need to just do this and move this over to another screen so that I am not putting a big block up in front of my screen. So again, what we're looking at here is, let me do one more thing because I have a feeling that we may have already, I may have the next one. Let me just get a quick update to see if it's come out yet. No, not yet. Not yet. So they're still working on it. So I'm going to go with what I already have. And that would be this particular one. And this one is this is this evening's. So these numbers go with today. September the 17th. Okay, we're good. We're good. Okay, so what I'm reviewing with you is today's closing figures, and that remains the same. So the volatility triggered 19,190 in the NDX and 19,417 in the NQ. In the Qs, right? We also have, I'll give it to you all of them, depending on what you trade. The volatility trigger in the Qs is 472. And you see that the Qs closed just above at 473.52. So it's not going to take much to really rock this boat. First signal you're going to get likely from the Qs and the NQ and the NDX. And if that happens, look for this thing to really begin to accelerate to the downside. Now, again, I can't say that we're just going to go top, rally, and turn and come flying down. I don't know. Is it really going to turn into that they bought the rumor, lower rates, lower rates, lower rates, and now sell the news? Or is it going to be, well, we sold the rumor and now we're going to buy the news? I don't know. I would think that there's enough out there and enough discussion that it's not going to be this joyous thing like it's just we're in the money and let's just go to the bank. You know, that rates are just going to start dropping and they're going to be so low, and that's great for stocks. We got to load up. I don't think that's going to be the reaction. I think we're in for a little bit of a surprise. We might spike, and it'd be crazy to spike that many points. So again, I just don't know. I'm reviewing this because there's a possibility that we will start to work our way higher. But we'll see. We'll see. So we have all that. But what I want to make clear is that it's not much room to the downside to flip this atmosphere over to a negative type of an atmosphere. So where that the trade is going to be more to sell rather than to buy because of the gamma levels, because of the volatility triggers. Now, add on to this. Tomorrow, I believe at the open, is a vol expiration. So volatility options expire tomorrow morning. So again, we saw a lot of hanging out and we're sitting right around 17 and they popped. Did you see that? They popped at the end of the day. Volatility gets released. Suppression, release. Volatility popped. Now, take it every which way you want. But see, that's going to be another in play. So now I want to go over and want to look at the S&P. Same deal. This one actually is a little bit closer to being an ABC flat, right? Again, leaving this as an ABC. Here's the A, here's the B. 1, 2, 3, 4. We come back up. We equal that high, 47.75. Actually, no. Come on, what are you? Now, 47.78 actually should be a little bit higher. So let me go right there, activate, bring it up ever so slightly. There you go. And this should be also up a little bit. Yeah, I'll just leave it. Sometimes it's really hard just to get it exactly correct, right? But it's 5,778 basis the December contract. So if this is A, B, C, and that's only minute A, and this is A, B, and we're looking for the finish of a C wave, well, it could go irregular, right? Because look how close we are. But unless it's just a 1, 2, 3, 4, and a 5, and we're done. And a C wave, and we put a B wave there, and we drop back down. Now that would suggest that we are going to come back down to that 5173 area, maybe as low as 5,037. But flat is flat. That's why we call it flat. You know, B gets to where A and C and C comes back down to the low of A. So that's a flat. Now, what if not? What if it breaks? Well, here are the levels: 1.236, 5916, 1.382, 6003. And then what does that look like coming back down in the other direction? Well, we can go from, I want to just try to get this. Just give me that. There you go. Let's see if I got this one right. Okay, now let's go to 382. 1.618, 49.45. In the NDX, it's 49.53 is that low that we had back in April. So 49.45, okay, it works. 1.618, okay, it works. Now let's take it to the next level. What if they go full bore? They get up to 6,000, which many analysts think the S&P is going to go to 6,000. It just might. You see what it is? Bam, right at the bottom, right at the bottom. 5,025 or 23, somewhere in there, 23. But into that area, putting in the new low, 1.618 if it goes full bore. Okay, so actually a little bit higher. Activate extensions. Get right up there. There you go. So it is, they're equal. Like 5,031, 5,037, right in that hood. And that would be 1.618 for wave C. So it all fits. And it's not a crash. But I want to tell you, when it starts, it's going to feel like it. So, and again, let's go over. And now I want to take a look at the SPX and the ES. ES closed at 5701. Okay. I want to show to you, or to let you know, that the volatility trigger is now even higher. We kind of was sitting around 5,600. It's moved up. It's now 5656. And the largest gamma, now in the SPX, the volatility trigger is 5590, but the largest gamma position on the way coming back down is at 5,600. So 5,600 SPX, serious support. If broken, volatility triggers out of the water. It shifts the narrative to risk off. That's the point. This is an important point. Write it down. Do whatever you got to do. And with the SPX closing at, come on, let me get over here so I can see it. They always do this to me. Such a pain in the butt. The SPX, yeah, still not gonna tell me. Closed at 5634. Do we think that the SPX could drop down? You know, to that? Good God. This doesn't want to happen. All right, come on. All right, so I'm just getting watch list after watch list. All right, leave it. Jeez Louise. There you go. Close. Thank you. Sometimes my mouse won't grab it. So my point is, it's like we really need to just be aware of where these are. The options flows really they do have a lot of control over how these indexes were going to move, how the ETFs move, how many stocks move. It's the options flow. And there are measurements and there are different things that you can do that you can follow this. More importantly, since if you're trading the SPX or the S&P or the NASDAQ or the Qs or the spiders or any of these are important things to keep in mind, because what are the Qs? Options. Yes, it's an ETF, but the options are what trade so heavily. The spider options trade massive. Now, I'm just going to go take a look to see what it looked like today. Now, these are today's options. I don't think, look at this. 563, 340,000, 250,000, 384,000, 378,000. We have 1, 2, 3, 4, 5, 6, 7 clumped together over 100,000 options. All you got to do is multiply that by 100, and then you got how many shares of spiders had to trade if they were hedging each one. Or what does that do to the flows as we widen it out and we're looking at that they're selling a basket of the 500 stocks? How much do we need to sell? So you can see, and then over here we have 1, 2, 3, 4, 5, 6, 7 also in a row, and the puts of of 6 figure. So 100,000 or more, and 350. These are the spiders. Trade like May wheat. That was today. What's it look like for tomorrow? Not there yet. Not there yet. I guarantee it will be. I guarantee you it will be. So this is on a day-to-day basis, a lot of trading. So granted that all those options are now, they're expired. So a lot of it had to do with today, and that releases a lot of gamma. That releases the delta. That releases things because they're dead. They're gone. They're removed. The cash is settled. Move on. But while it was happening, it does have an effect on the movement in the market. And that's where I'm going to end this. So tomorrow we have, where is that? So I'm over here. Let me just go. Sorry, folks, but I'm going to go over here and I'm going to just go to what we have coming. Besides the Fed tomorrow, we do have housing starts and building permits at 8:30 a.m. And then we all have to wait to 2 p.m. for the FOMC. So the market may do a couple of crazy things in between, but I think it'll be pretty quiet. I actually do think it might be quiet until we get the Fed decision. And the next update will be on Wednesday, September the 18th, and hopefully we will have a very clear understanding of direction and what's going to be happening with this market.